The real estate market has a long history of being thought of as a secure and lucrative investment. However, one of the richest persons in the world avoids making such investments for no apparent reason. We will learn today why Berkshire Hathaway Inc. CEO Warren Buffett frequently expresses his disdain of the real estate market. Does Warren Buffett possess real estate market knowledge that the rest of the world lacks? Watch the full video and find out. Many people criticize Warren Buffett's position on cryptocurrencies like Bitcoin and blockchain technologies. Although its market worth has topped $1 trillion and its price per coin previously reached over $60,000, he believes Bitcoin is useless and is not a commodity because it doesn't produce anything, and has stated that he wouldn't pay $25 to acquire all the cryptocurrency in existence. Buffett, on the other hand, thinks that is completely absurd. It is hardly unexpected that he has a history of being extremely critical of cutting-edge technologies. He has the same opinion about online firms during the dot-com bubble. Bill Gates, a close personal friend of Buffett's, tried repeatedly to convince him to invest in technological companies like Microsoft, but he always responded the same way. He has passed up a lot of lucrative investment opportunities, including those provided by Tesla, Netflix, and Amazon, among others. Each of those businesses saw a minimum growth in size of a few thousand%. If you had invested $1,000 in Tesla when it first went public, you would today have made about $225,000. Millions of dollars may have been made by investing $5,000 in Tesla stock. A few years ago, investing a few $1,000,000 in any of these companies would have yielded a return of at least a few $1,000,000,000 today. Buffett's net wealth is close to $100 billion. Despite the fact that the nation is in a crisis and the stock market is falling. Despite the fact that he has missed several investing chances, this is the case. In fact, during the global economic crisis of 2008, he overtook Bill Gates to claim the title of the richest man in the world. Warren Buffett, on the other hand, has repeatedly ignored the real estate market along with cryptocurrencies, technologies, and NFTs. You did indeed heard that right. The real estate market is not one in which Warren Buffett is active. The sole piece of real estate he has ever owned is his home in Omaha, Nebraska, which he bought in 1958 for $31,500. As of the year 2022, the value of this property is roughly $285,000. The logical question that follows is why the investor who has made the most profitable investments in history decides against investing in real estate. Why does he avoid buying property even if it is the safest investment option? What information does Warren Buffett have that we do not? We will answer all of these and many other questions. It's fine to criticize Warren Buffett's investment decisions, but that doesn't change the fact that his steadfast adherence to his strategy is what earned him the title of the most successful investor in history. Over 20 years, exceeding the S&P 500 by 84, he has reportedly invested actively in the stock market for a very long time. Warren Buffett was forthright and steadfast when asked about his views and real estate investments. Purchase real estate if you want to settle down for a long period. A mortgage with 30 years payments, in his opinion, is the perfect financial instrument. Why, if real estate offers such a great chance to gain money, does he never invest money into any of his own? After the housing bubble broke, Warren Buffett was holding back a sizable fortune. Nevertheless, he was aware that the real estate market will eventually recover. So why didn't he invest in real estate instead? This choice is influenced by numerous things. Let's start with the first thing. The process of investing in real estate differs from that of doing so in the stock market. Property management is a profession that needs constant attention and time. Even while it can be a secondary source of income, owning a single piece of real estate may not seem like a big deal, but once you have several, it becomes a full-time job. Even because you own a home, that doesn't mean you can always rent it out. However, you can still make your mortgage payments even if you don't rent the property out. The second problem is that there is always something wrong. Because a property requires upkeep, you might be able to rent it out for lengthier periods of time when there is an emergency. That does not imply that the property is a bad option for a company. It simply means that you have a business that requires you to devote a reasonable amount of effort to managing it. Warren Buffett has never invested in real estate because of this, but has since mainly concentrated on stock investments. The third and last reason Buffett avoids the real estate market may be the business has a strong foundation that permits for rapid growth. Another possibility is that it developed a technology that, when produced in large quantities, will generate massive profits. Market prices for equities are usually incorrect, especially during times of crisis. A market crash results when investors start selling out of fear. Investors start to sell out of their stocks in huge quantities after being worried by interest rate increases, which causes stock prices to fall. Consequently, even the most successful companies are not immune to the effects of panic sell-off. As a result, finding a great deal in the stock market is much simpler than finding one on the real estate market. First off, the value of a real estate generally doesn't change all that regularly. There are occasional bubbles and bursts, but they typically only happen once every 20 years or so. A real estate agent who specializes in that area will definitely seal the deal for himself before anybody else learns about it, because there is also a great deal on the market. In contrast to the stock market, real estate does not allow for the concept of exploring a variety of properties from the comfort of one's office. It's not an easy task to list a company's stocks on a public exchange because the approval process is more stringent and time-consuming. What do you think? Is Warren Buffett right, or is he missing out on more million-dollar opportunities? Tell us in the comments below, and if you liked the video, please subscribe to the channel. See you in the next one.